Hello, everyone. Let me ask you a question. When you look at a price chart, what do you actually see? Most traders see candles going up and down. They see patterns, they see lines, but they're missing the most important piece of information on the entire chart. Price is just the advertisement. Volume is the actual transaction. It's like judging a restaurant only by its sign outside without ever checking if there are any customers inside. In this video, I'm going to show you how to read volume correctly, not just what volume is, but what it means, it matters, and how to use it to see what's really happening behind every move. After this video, every candle on your chart will tell you a story, and volume with a proof. Not financial advice, just education. Let's get into it. The two languages of the market. Let's start with the basics. Every chart speaks two languages at the same time. Language number one, price. Price tells you what happened. Did the market go up, down, or sideways? That's the headline, the news title. Language number two, volume. Volume tells you how much conviction was behind that move. How many traders participated? How much money actually moved there? The evidence, the proof. Think of it like an election. Price is the result, who won. But volume is the number of voters who showed up. If only 10 people voted, does the result really mean anything? But if 10 million people voted, that's a declaration. Same with the market. A big green candle on low volume, a big green candle on high volume, that's conviction. That's real. From now on, every time you look at a chart, don't just ask where did price go, also ask how much money stood behind that move. The core model, effort versus result. Now, here's the single most important idea in this entire video. To read volume correctly, you only need one mental model, effort versus result. In the market, effort is volume, how much energy, how much money being used. Result is the candle, how far price actually moved. Think of it like pushing a car up a hill. Your foot on the gas pedal is the effort. How far the car moves is the result. Case number one, you press the gas, the car moves easily. Big effort, big result. Everything matches on the chart. That's a big candle with high volume. Lots of buyers, lots of conviction. The move is real. Case number two, you slam the gas pedal, the engine roars, fuel is burning, but the car barely moves. There's something blocking the road. On the chart, that's a tiny candle with massive volume underneath. This is called absorption. What's happening? Buyers are pushing hard, but there's an invisible wall. A large seller, smart money, is sitting there quietly absorbing every single buy order. When the buyers exhaust themselves, there's nobody left to push price up, and very often, perhaps sharply. Case number three, you barely touch the gas, but the car keeps rolling uphill by itself. There's no resistance. The road is empty. On the chart, that's price moving up on low volume. This is called no supply. It doesn't mean buyers are super strong. It means sellers are absent. Nobody is selling, so the market doesn't need much effort to move. Now here's your cheat sheet, the volume matrix. High volume plus big candle equals sign healthy move. High volume plus small candle equals sign absorption, warning sign. Low volume plus price still moving equals sign no supply or no demand. The other side is absent. Memorize three combinations. They're the foundation of everything that next. Three patterns every trader should recognize. Now let's apply effort versus result to specific candle patterns. This is volume spread analysis, VSA. Pattern 1, stopping volume. Imagine price is crashing red candle after red candle. Everyone is panicking and selling. Then you see this, a tall red candle. The volume bar underneath is huge, the biggest in weeks, but the candle doesn't close at the very bottom. It has a long wick below, and the close is near the middle. What happened? Someone with deep pockets bought everything the panicking sellers were throwing away. High effort, small result. That's absorption at the bottom, a potential reversal zone. Pattern 2, buying climax. Now imagine the opposite. Price has been going up for weeks, news is great, everyone is bullish. Retail traders are jumping in because they don't want to miss out, FOMO. Then you see a huge green candle with extreme volume, the highest on the chart. To most, this looks like strength. But this is not strong buying. This is strong selling disguised as buying. Smart money uses that wall of buy orders from retail to unload their massive positions. The moment you FOMO in at the top might be exactly when smart money is walking out the door. Pattern 3, no supply test. After an uptrend, price pulls back a little. You're worried, is this a correction? Then you look at volume. A small red candle and volume is very low. The market is asking a question, does anyone want to sell here? And low volume answers, no, not really. Sellers are absent. The uptrend to continue. The myth of bar colors. A common mistake is thinking a green volume bar means buying and a red one means selling. This is false. Volume simply counts the number of transactions. The color of the bar usually just matches the color of the candle's close. The rule: ignore the color. Look at the size of the volume bar and the closing position of the candle. Volume divergence, the early warning system. When price and volume disagree, a change is coming. Bearish divergence, price is making new highs, but volume bars are getting smaller. The rock is running out of fuel. Bullish divergence, price is falling, but volume is drying up. Sellers are exhausted, and a bottom is likely forming. The three-step playbook. Step 1, zoom out. Check the daily or weekly chart to see if overall volume is increasing or decreasing. Step 2, zoom in to key levels. Watch volume at support and resistance. If price breaks a level on low volume, it's likely a trap. Step 3, wait for confirmation. Never act on one candle alone. Wait for the next candle to confirm the move. For example, no supply test after a breakout. Volume is not just another indicator. It is the truth serum. Price can be manipulated, but volume shows where real money and commitment are stepping in. If you found value in this, hit that like button and subscribe for more deep dives into the mechanics of the market. I'll see you in the next video. Stay disciplined.